What is business check cashing? Have you ever wondered how businesses turn checks into cash? Business check cashing is the process that allows companies to convert checks made out to them into cash. Unlike personal checks, which are written to individuals, business checks are issued to a company or organization. These checks representing payment for goods, services, or other business transactions. When it comes to banks and credit unions, cashing a business check involves specific procedures. First, let's clarify the difference between cashing and depositing. Depositing a business check into a business bank account is usually straightforward. Anyone can do it, even if they are not the owner or authorized signatory. The funds go into the account without any cash exchanged immediately. However, cashing a business check, which means getting cash directly, is more regulated. Banks typically requiring that the person cashing the check is authorized to do so on behalf of the business. Now, let's talk about authorization and business structure. For sole proprietorships, the owner and the business are legally the same entity. This means the owner can cash checks made out to the business or themselves. To make this easier, the business checking account should include a doing business as designation if the business operates under a different name. For partnerships, corporations, or limited liability companies, cashing a business check is a bit more complex. Only individuals listed as authorized signatories on the business bank account can endorse and cash the check. The business must have an established business bank account, and the bank's policies may restrict cashing business checks altogether. Banks and credit unions generally prefer that business checks be deposited rather than cashed. This is because depositing provides a clear audit trail and reduces the risk of fraud. Many financial institutions may not allow cashing unless the person cashing the check is verified as an authorized representative of the business. This helps protect both the bank and the business from unauthorized transactions. Another important point is the separation of business and personal finances. It is critical to maintain separate accounts and checks for business and personal use. Mixing these can complicate financial tracking, tax reporting, and legal protections. Using business checks enhances the professional image and credibility of a business when dealing with vendors, employees, and clients. Lastly, let's distinguish between banks or credit unions and check cashing businesses. Banks and credit unions are federally or state-chartered financial institutions that offer business check cashing as part of their services. They typically operate under strict regulatory compliance. In contrast, check cashing businesses primarily cash checks for a fee and are subject to different regulations. Banks and credit unions generally have more stringent verification and security processes for cashing business checks. In summary, business check cashing at banks and credit unions is a controlled process that requires proper authorization. It is usually recommended that business checks be deposited into business accounts to maintain clear financial records. When cashing is necessary, it must be done by authorized individuals associated with the business, often only at the bank where the business holds its account. This approach helps safeguard both the business and the financial institution from fraud and errors.